Hello everybody, welcome to another video by the Ancient Trader. Today let's see the performance of the trade which we have deployed for the weekly expiry of July the 14th. And if I currently log into the portfolio into the Opstra, I see that there has been a profits of 12,300. So this is around like 0.4% of the capital. My target was around 0.7 to 1%. So going by the market, there was a gap up and the gap up didn't sustain for one of the other reasons that there is a USA job data which would be out tonight, and it's quite possible that people do not want to risk the position overnight and carry the options data on to the Monday. So if the US job data is bad, then it is quite possible that the market could come down a bit, maybe test 16,000, and if the US job data is good, it might touch around 16,450. So what I'm currently doing is this. I have this trade. I already have 12,300. As you can see, this is higher than the payoff which was mentioned on the expiry day. On the expiry day, which is in green, it shows around 9,904, but however currently it's around 12,300. So now, and on the put side, we see that we have our break even up to 6.5%, which is quite high considering that markets are stabilizing and the VIX has dropped significantly over a period of few days. As you can see, the VIX has dropped, and one of this reason that VIX has dropped is that the traders feel that the worst is sort of over and the global markets are sort of positive. And I also look into the FII data, which are the institutions which have been net sellers for a long time, and as you can see that they have been selling quite a lot less compared to the months of June, July, March, June. There have been significant selling of around 40,000 consistently. And it's been a week and that's around 4,000 crores. So when you translate it into 4-week July series, I think that's around 16,000-20,000. That's considerably less, and the net institutional buy is positive. So markets are looking a bit sideways or trying to consolidate. And by going by the trade, this is what would happen, that if I take my payoff diagram to Monday, considering this is Saturday and Sunday, I have a break even at minus 4.26% and 1.76. So that's around like 15,486 and 16,520. And if it remains within this range, I might end up making 23,000 to 20,000, 19 to 23,000. That would be the range within this. But I feel that I could move up a bit. So this is where the first adjustment comes. I think that 16,700 would still hold. I would be happy to create a strategy which has a break even of 16,500 or something like that, and the downside could be even more less. Try to keep it around like 2.5-3%. So for this, what I will do is this. In our position, as you can see that the option premium has reduced significantly on the PE side, and you can see that the 1600 PE has lost more amount of money. So if I need to move this to a higher level, let's say 15,400, I tend to move the hedge also by 200 points depending on how much ever move I make here. So in case of an U-turn or a V-shape recovery or on the downside, then I should be able to see the profits. So now let's look into Opstra. What would happen when I make this sort of changes? So over here, this is if I plan to close this around 3.75, and then I close this PE at 173. So what I will do here is simply go ahead and buy 16,400 PE 4 lots. The ratio remains the same, and I go ahead and sell 15,400 PE 40 lots, where I'm matching the delta of the same premium as 16,700, and this is what it would look like. And if the market slides downside, I have a very good profits, and market goes up, I need to adjust a bit more. So I'm hoping that this weekly expiry would be within this range, hence I'm not moving the C side. And the payoff diagram by Monday would look like this. The break-evens are around 15,500 and 16,500. So that's around 4% again, and the profits would be roughly around the 21, 22 over here. And also if it goes down to 16,000, my profit should look 38, which is more than the target which I have of 1%. So by this trade, I would like to move this and then do the further adjustment on the coming days if it is necessary. And if I reach a target of 35k, I would call quits on this trade. So yeah, this would be the changes I would be making, and see you tomorrow or on Monday with the following adjustment trade. And I think that market might remain just over here. The reason is being simple, that if you look at the open interest OI build-up, there has been a straddle which is created at 16,200. So the traders are expecting it to remain between 15,900 and roughly around 16.5. So that's the reason I would like to carry this trade to Monday. And if there's any sort of adjustment on the call side, I would be happy if the market falls down, and if there is some adjustment on the call side, I would make it and try to pull the trade towards Tuesday and Wednesday to gain the realized profits. Thank you.